This is The Bottom Line. The Bottom Line on 938 Live.
Now, the Ministry of Trade and Industry just released a report on the performance of the Singapore economy for the second quarter. And for his analysis, we have on the line with us Leong Wai Ho. He is Senior Economist at Barclays. Now, Wai Ho, Singapore's economy in Q2 grew faster than previously estimated by 0.1% compared with the previous quarter. Are you surprised by the data?
Yes, rather pleasantly. I'm feeling a lot better about the growth outlook. It's quite clear that global demand is now recovering, leading indicators from the US and China turning up strongly from June, and that's been sustained into July. So I'm cautiously optimistic that we can expect some acceleration in growth momentum in quarter three.
Okay. Now, the manufacturing sector unexpectedly expanded as well, rising by 1.5% on year. And based on your assessment, do you think that the slight pickup is likely to continue in the coming months?
Well, definitely. I think we have passed the bottom and things should be picking up into Q3. July's PMI bounce recently was the clearest indication yet that we're on the cusp of a broader manufacturing revival. And this is going to be led by tech. And again, it's due to the improving U.S. investment cycle and stronger Chinese demand.
Now, services and construction sectors were the key drivers of growth. How promising are these clusters given that interest rates are likely to rise next year?
I think this is an interesting question because the roles of services and manufacturing will be reversed in H2, where it will be stronger exports and manufacturing that will offset a slightly weaker services economy. So slight opposite of what we saw in Q2. Manufacturing itself is also less susceptible to higher interest rates than real estate and construction industries, where leverage levels tend to be higher.
Right. Now, the government has narrowed its full-year growth forecast to 2.5 to 3.5% this year. So will you also change your full year's forecast?
No, we have been in line with the official estimates. In fact, we've been penciling in 3.5% growth for the economy this year for some time now, which is at the top of the new range. We're happy to keep it there, and it says that the economy should grow at about its potential rate this year.
Right. Now, IE Singapore also released its trade data this morning, downgrading its non-oil domestic exports forecast and narrowing its total trade projection. How bad is the outlook for exports and trade?
Well, I don't think it's bad at all. I think this forecast is slightly cautious and has precautionary motives behind it. I'm a bit more optimistic that the recovery in NODX will mirror the recovery in IP in the third and fourth quarters. So it could feel quite different. At the end of it, Singapore is very highly leveraged to any pickup in global demand. So if the US investment cycle is picking up and North Asia is stronger, Singapore usually rides the crest of that up wave.
All right. Well, thank you very much, Wai Ho. That is Leong Wai Ho. He's Senior Economist at Barclays on The Bottom Line.